We're live. What is up, everybody? Happy Thursday. Thursday afternoon, which means it's time for some good old CRL chart request live. I'm Spencer Israel. I've got Steve Straza and Options Sean, formerly known as Chicago Sean McLaughlin with me today. So if you've watched the show before, you know it's pretty simple. You drop a ticker in the chat and we talk about it. Today we have a slightly different wrinkle because Sean's here. We're going to add some options hunting to that process a little bit. So that's what we'll do. Steve, Sean, how are we doing so far today?
This is almost like Flow Show meets live charting. I love it. We're like fusing two already awesome things together for an even more awesome thing.
And clearly I'm the rookie here because I just had like delayed audio coming at me. I'm like, wait, what's going on? And I realized that I had our link open on YouTube over here. And I'm like, so sorry if you were talking to me, I didn't respond.
Sean,
now we're good.
Sean, when you call into the radio station, you got to turn your radio off, man. All right.
Call in show 101. I violated that one. Sorry, guys.
Yeah. Okay. I've got one ticker, or I guess two tickers on my list, but we already have a few in the chat. So let's get through mine and then we'll go straight to the chat. I figure we should start today with the QQQs because it's official. We're in a NASDAQ bull market. At least that's what they tell me. 20%, 20%. But anyway, Straza, what do you got here on the Qs? And then Sean, after he's done, why don't you see if you can find us an options trade that's tempting?
Okay.
So this is a monster level for the NASDAQ. I like looking at the NASDAQ right now, right? Triple Qs is just the NASDAQ Invesco ETF because they're the leaders right now. So there's a lot of information there. So three levels here. We call a confluence of resistance, right? Confluence of resistance is when a number of different overhead supply zones or interest levels coincide at the same price level. That's going on right now. So the first would be if we draw a Fibonacci retracement, right? If we draw retracements from the 2020 to 22 or 21 bull market, we're right back at the 38% retracement. Now, interestingly enough, the NASDAQ found support down at the 62% retracement fall of last year. When we anchor the volume weighted average prices, right? We look from the all-time highs, VWAP's coming in right here around 315. When we anchor it from the COVID lows, it's also coming in right here around 310, okay? So between the 38% retracement, these two AVWAP levels, and when I drill into the daily, you can see even more resistance here.
Sorry.
We have pivot highs from February also at this level. So call it 315, right, for confirmation. Above there, and I would say maybe this reversal in the NASDAQ 100 is completed and a new markup phase is underway.
Critical level. Sean, you got any critical options for us?
All right, so here's the deal. If Straza is bullish on QQQ, well, I mean, he's got my attention. How strong do we feel about the 285 level being like some long-term support, Straza?
Yeah, for sure, but that's a lot of downside, right? I mean, that's 30 points of downside from here.
Yeah. The reason I'm asking, here's the reason I'm asking, is if we think this thing can run into the summer, right? If we think the headwinds for tech look pretty good, you know, interest rates are falling, that's good for tech, yada, yada, whatever they like to talk about on TV.
Yeah.
Well, then I would have to believe that this 285 level is gonna hold, right? That was the low that we had back in early March, right? So if that being the case, as an options trader, I'm looking out into August. I feel like that gives us enough time for something to materialize here, something good. We have a chance for the the April-May rally, perhaps. And the 285 strike on the puts in August. Right now, that's approximately the 25 delta put. I could sell those puts right now as I'm looking at my screen. I could sell those puts for about $8.30, right?
Okay.
I could sell that. Now, this is not an aggressively bullish play yet. It's moderately bullish as long as NASDAQ doesn't just crash on us. Likely we'll make some money. How I could turn it into an aggressive play is I could sell those puts at 285, collect 830 for them, and turn around and go and buy August let's say 340 calls that are
Risk
costing
reversal?
about $9 right now.
Okay.
And all in, my net cost is about 70 cents. And as long as NASDAQ holds above 285, worst case scenario, I lose 75 cents. Best case scenario, we get a run and those calls start paying.
JC's disappointed. He usually likes to be here for the risk reversal conversations.
I know. JC's missing out. He's going to get real excited when he hears about this.
Here's what I would say. I would say one thing. I need confirmation, right? And we're sitting here at 140 on Thursday, and I'm looking at the NASDAQ candle kind of melting intraday. Let's see these highs hold, and really let's get above 315 and hold that. I would look at tech and the tech indexes for confirmation. They're already making new highs. These are like 6-month highs here, right? Highest level since last August. Let's see these moves hold. And then let's see things like, the weaker areas, your micro caps and financials not breaking down. A risk reversal right here, right now. I think things are vulnerable. I don't love it.
All right,
Okay,
how about this?
I'm moving this on. This is a request from Strauss himself, actually. FCNCA. Every time we get to 5-lettered tickers, alarm bells start going off in my head. Because I just assume they're either a preferred stock or it's like one of 5 share classes, or it trades over the counter. What is FCNCA? What is this?
I deleted my volume off this chart, so that's the issues with live charting. So don't worry, Spencer. This one is plenty liquid, meets our market cap criteria too. I think I just did the math on my solar powered calculator. I think I saw 20 million in average dollar volume. But yes, it is a small stock. I think let's check the cap here. It's gained a lot just recently.
Why do you want to bring this up?
They just bought Silicon Valley Bank's assets. So they were a mid cap not long ago. I don't know if they're still a mid cap. I'm seeing 8.5 billion. So anyway, stocks rallied almost 100% just in the last 2 weeks, right? Shown here, making new all-time highs. Find me another bank making new all-time highs right now. You can't do it because there are none, okay? So this guy stands alone, making new highs in the banking industry. Most banks look like this right now. First Citizens looks like this. That's what we call relative strength. These guys got like the deal of the century. They paid basically nothing for $16 billion in net assets. It's an $8 billion company. The current equity is $8 billion. They just acquired $16 billion in equity for $500 million. So I don't know what's going on, but it should be illegal for the FDIC to give away a deal this good. I don't know why everybody wasn't trying to acquire.
Well, the thing I'm wondering about that, Straza, is why this bank? I've never heard of this bank. Why did they get the deal versus some other bank?
They've done it before. I don't know what their history is, but they've acquired something, with the government before, I heard. So maybe maybe they have the right relation.
Smells like a backdoor deal to me. Someone's back is getting scratched.
Did either of you see my tweet about this bank the other day?
No.
Yeah, they're somebody be holding.
Yeah, their CEO. Their CEO. His real name is Frank B. Holding. So maybe Frank be holding the bag. I don't know.
I saw everybody talking about how Frank be holding the bag. Frank's holding new all-time highs. Frank's making out like goddamn bandit. It's funny though because nobody wanted to do this deal. It took a very long time to get this done. So banks were very hesitant to do this. Yet the street is telling us something very different. They're applauding this and really rewarding.
Wait till we find out that Frank B. Holding is like a second cousin of Barney Frank.
Listen.
All right. Let's keep going here. Sean, do we have any options on this, or you want to pass?
I want to pass. When I see 5 letters, I think YOLO Piker trade, and I'm not interested.
Okay, fair enough. Okay, to the chat we go. Hanson Shan 2 is asking for 4 FOUR, which not one I'm intimately familiar with.
Nice base, man. Very nice base here. Like these are the kinds of growth stocks you want to be buying, right? Above last year's highs, of the March highs, even, right? So nice base. Draw a little arc on this. Scoop there. And above, call it 67. 67. I think you could target those all-time highs back about $100, almost 50% of upside from here. I like it.
You know, for a stock I'd never heard of until just now, it's got pretty liquid options. So if somebody wanted to play this with options, they could. And volatility is pretty cheap here, so it sets up for a good, just keep it simple, stupid, buy a long call position. And these are by the way, these are my favorite type of setup, Straza. You know this: a stock making fresh all-time highs with low volatility in the options. Just buy calls and put it away and I like these. These are my favorite kind of setups.
Not quite all-time highs yet, but it is.
Oh, it's not?
And no, almost. It's heading that way though.
Oh,
but it is making new all-time highs on a relative basis. I'm just presuming that this stock is in the payments space. It's a software stock called Shift4 Payments. So here it is relative to the iPay ETF, mobile payments ETF, new all-time highs. So I guess if you want to be in that space right now, things like Square, PayPal struggling so much, maybe this is a really nice option. There's the base again. I think it's a sweet setup here.
Yeah. Sorry, I was looking at a one-year chart. My bad. It's I like it less than I liked it before, but if someone does like this trade and wants to trade with options, buying calls here is not a bad idea.
Yeah. JW99 is asking about Shopify. This is one that I have dabbled in, and for day trades on several occasions, and have been wrong almost every time.
Okay. So I bought this one last fall on the failed move down here. I want to add more, and I probably really should. This is a great reminder. Maybe I'll even do it today because we're right back at this base breakout level, right? So we took off from this base, looked like we were resolving higher, and we came back, checked in, even overshot it, right? Looked like a failure for a second. Now we're back above. I would define risk right here about 44, right? These highs from last year. Call this like an inverted head and shoulder. So above 44, I think risk is to the upside. I really like this one fundamentally too. So this is like a long-term Straza portfolio holding. I'm a big fan of Shopify.
Well, yeah, never mind. I was gonna say every trade becomes an investment when it's well advertised like that. But anyway, Sean, you have anything, or is this
totally misunderstood what I just said?
I'm far more conservative on this trade than Straza is. I'd rather wait till it gets above 50 before I get interested.
Okay. Let's keep ripping through the chat here. Joe is asking, oh man, he's got several here. Which one do I want to do? Let's look at Berkshire Hathaway. He wants to know the fib levels on Berk B. I own this and I haven't looked at it for a little while.
I'm the wrong guy to ask. I just got out of a position in Berkshire yesterday.
So fib levels, we could do one of two ways. We could anchor it from the COVID drawdown here, right, where we have a nice little range here. I kind of like this, but it doesn't give you anything actionable to work with right now, right? You got the 261.8 up here by the old highs, and then you have the 161.8 down here where we actually do have a lot of price memory too, right, from last year and 21. Or you could zoom in on a chart like this and anchor the fib from the 2022 drawdown, right? And then we have an even tighter range. Let me delete the old ones so we could see it here. Get rid of this 200-day sideways, not really telling us much anything. So we're in a little range on both, right? So we're in between like the 38% and 62% now. So you could use any of these levels, something more tactical, maybe play it against this 300 zone here. Get confirmation on further upside above like 323.
Sean, and I'm assuming since you just got out of this, there are no trades that you.
Yeah, I mean, look, yeah. Berkshire has become. We kind of joke around here, but Berkshire has kind of become a vehicle for us to sell puts on whenever the market gets a little slippery, when volatility is rising. We've gone back to the well on that trade numerous times over the last year, and it just keeps working. And it just worked for us again when Berkshire, when the market got slippery following all the nonsense with the banks a few weeks ago. We sold puts, because we're like, hey, who do you trust out there? Berkshire Hathaway? Yeah, I trust Berkshire Hathaway. And we sold some puts and just actually covered them at our profit target yesterday. But I'm not aggressively bullish on the stock. I mean, I'm looking at the chart here, and I feel like it's set up for some sideways slop for a little while, like a lot of things. I'm neutral on Berkshire here.
Listen, I'm neutral to more than neutral. I'm cautious on all financials, and that includes Berkshire. I think you just got to be really careful here. Can we talk about XLF quick, Spencer?
What do you got?
So this is the most important chart and level in the market right now. We talk about it so much. We draw a huge polarity zone here. Those are the pre-financial crisis highs from back in 2007, about 30.50, call it 30.31, right? The market continues to remind us how important this level is. And we have tests from 2018 and 2020, just before the COVID crash. And now we're testing it from above, right? So we're seeing polarity in action as former resistance turns into support. This level breaks, downside risks are elevated. That's the biggest thing I'm watching right now.
All right, let's switch on over to industrials here for Alex, who wants us to look at Hexel, HXL,
Yep.
or Hexel, however you pronounce that. I don't know. Hexel, maybe. Probably Hexel.
Excel, like Excel, like Microsoft
Yeah.
Office. Yeah. All right. So nice base, really nice base. Still have those former highs to kind of contend with. So not, yeah, you still have some overhead supply here. So I don't love that. Let's anchor the fib from the COVID drawdown. Yeah, look at that. So the 62% comes in right at this base breakout level here. I think that's where you kind of want to define your risk. So trading about 68 and change today with a stop level about 63 and a target about 86. That's still doable, still tradable. Closer you could buy it to 63, the better.
John, anything stick out to you?
From an options trading perspective, no. The options are not liquid enough there. These are very wide bid-ask spreads on the at-the-money strikes. So it's a no touch for me.
How wide is very wide to you?
Well, the at-the-money April, which is the front month right now, the at-the-money calls are currently bid 350, offered 690.
That's pretty wide. Okay.
That's about a 90% spread.
All right. Moving right along. What about Enphase Energy for Timeless Tie, ENPH?
Secular leader, at least it was for a very long time, been weak really all year, since December. Let me clean the chart up, start over. So First Solar's been really hot in the solar energy space right now. Well, let's zoom out on Enphase a little bit, figure out where to anchor these fibs from. Had a nice base here back in 2015. That's where we have been anchoring our fibs from, watching prices hit one after the next, right? So look, really clean levels here right now. We want to play this against about 192 here. 92, yep. With a target of about 1795, which pretty much gets you to the all-time highs from last year. So that's it. Really, really strong on a structural basis. This has been a market leader for as long as I can remember now. And look, the current drawdown is not unlike things we've seen in the past, right? This one always tends to recover, rebound, and make a new leg higher. I think right now we could just trade this range between the lows and highs from last year.
I'm going to take the opposite side of Straza here. Your fancy 10-year charts look pretty cool, but the rest of us who are traders and trade on much smaller time frames, I'm bearish this stock. If anything, I'm selling a call spread here, selling like a 210, 220 call spread in May, and seeing what happens.
Rarely bearish the stock.
All right, we got a few more minutes here. Let's do a couple more from the chat. What about Nuvve or Nuvve Energy? It's not Energy, Nuvve Corporation. It's NVEI. This is an emerging markets payments company. NVEI.
I've never even heard of this, so that's cool.
It's traded 80,000 shares today. Do we even need to talk about it?
$6 billion cap. That's it?
Oh yeah. As a general rule, we don't talk about what's the market cap line in the sand, like 2 billion.
No, 1 billion, and then I need to see 10 million in average dollar volume. So this one, 80,000.
Okay, so a little bit not liquid enough, not traded enough for your taste, for our taste.
Average dollar volume here is only about 3 million. That's just below
Yeah.
our liquidity.
Okay. All right. What about here? This is funny. VNO for Joey M, commercial real estate. It's kind of sad that I saw the ticker VNO and I just assumed it was like a wine company.
So
But,
this is like one of those battleground spaces right now, right?
Yep.
It's all
Yep.
about commercial real estate. For any of you who pay attention to the news, that's like regional banks these days. I'm not into catching a falling knife. Chart like this, you really got to zoom out. I mean, RSI rarely gets this oversold. We got a 13 reading here, maybe the worst of all time, right? Yeah, it looks like it. So you really need to zoom out, use a weekly chart for something like this. See if you could find some sort of former high or low to trade against. You would have to go all the way back to the early 90s for Vornado. They've really been around forever. Look at that. So look, if you're going to trade something like this, you know, they are susceptible to huge counter trend moves, stocks that get, you know, hammered like Vornado has recently. But you really have to have an out, right? And know where you're wrong and are exiting the trade. For me, maybe use these early 1990 highs around 14, 15 bucks, right? The stock's trading around 14.87 right now. So not for me, not for me at all.
Yeah, I'm going to say the same. Normally, in a situation like this where there's a lot of uncertainty and I want to define my risks, I would probably want to buy puts in something like this. But the implied volatility in these puts is kind of through the roof right now. So you'd really be paying up, which puts you at an immediate disadvantage.
And when the implied volatility of puts is through the roof, it can tell you that the market is pricing in potential significant further downside, right?
Right. Like that's information that as a equities trader, if I wanted to short the stock, that might be worthwhile information. But if I wanted to play it by buying puts, I mean, I'd really be swimming upstream paying that kind of premium.
So, you know, I always like to bring up the relative trends here. I just brought up Vornado relative to the real estate sector.
Gosh.
This thing is a disaster, and it's been a disaster, right? So I would compare this to something like Credit Suisse or Deutsche Bank recently, where Credit Suisse got hit, and people are all like, "Well, didn't we see that coming for like 20 years?" If you just look at the chart, right? Because Credit Suisse has been slowly falling forever. We're not really the same thing on a relative basis. This is really bad. So
Here's what I don't really understand about like the commercial real estate weakness of the last few weeks or months in general. This sort of everyone's calling for this collapse in commercial real estate. This was obvious 3 whole years ago, right? When the pandemic began and everyone's working from home, and this was one of the this was going to be one of the many casualties of the pandemic. 3 years ago, we're talking about this, right? And I guess I don't know what has happened in the last month besides the chaos in a part of the banking sector that has lit a spark under commercial real estate collapse, because this was obvious 3 years ago to everyone, not just me, to everyone.
Well, my amateur fundamental take would be that with credit tightening around around the country, you got a lot of businesses that no longer have access to capital, or at least cheap capital that they used to, and that's got to funnel into leasing on office spaces and downsizing. Got a lot of people that still are working from home and they don't ever want to go back to an office. And these companies are sitting on these legacy huge offices that are empty. Like, if financing is tough to come by, I don't see any appetite for re-upping leases.
Real estate trends also take a long time to develop, right? It's a stickier market. Even right now, commercial real estate, these analysts and investors don't even know what to value these assets at, because you need to value real estate assets. Nobody's buying and selling. You know what this crap's worth.
I saw, for an example, the Flatiron Building in New York, this iconic building, which is sold at auction. I didn't even realize it was vacant. And then EA Games, Entertainment Arts Electronic Arts is doing some layoffs, and they're also closing some office space because they don't need the office space anymore, right? So a lot of companies probably in that same boat. Okay, Couple minutes left here. Oh, Joey Young with a good comment. Commercial real estate loans haven't matured yet. That makes sense. What about we'll do one or two more. We'll do Google for Am Rich. It's mega cap tech. So what do you think it's doing?
This is the place to be right now. So fishing in the right pond. Okay. Again, we're dropping the fib from the 2021-22 drawdown back to the 38% right here. We throw on, where's the 62 here? 62 comes in right here around 125. We got those pivot lows from early 2022. So I like this, right? Because you got the pivot highs just about right here. So call it 108, 109 for an entry. That tells me this base is pretty much complete, right? We want to see this trend reversal complete itself, right? And a new markup phase begin. So I like it 109 to 125, and then eventually back to the all-time highs if and when a new uptrend is underway. But I like this place. I like mega cap tech growth. I like that theme right now. I think that's a place to be.
I would say that the 110 level is very important. And if I had to put a trade on right now, I would probably play it via a call calendar spread. Some spread where I'm selling the 110 calls, let's say in May. I'm not looking at prices here, but sell the May 110 calls and buy the August 110 calls. And so if Google takes its time working itself out of this kind of sideways sloppy chop that it's in, that could play well with the calendar spread. The short option will help take this thing out of the weight, and then we could participate in a rally into the summer. That would be, if gun to my head, if I had to make a trade right now in Google, that's the trade I would make. I would put on a call calendar spread.
So I like these call calendar spreads. Everybody go watch Sean and my video from, what was it, Tuesday, the Flow Show video.
Yeah.
We talk all about this. I think it's a really optimal strategy for these uncompleted bases, right? Where we're looking for a move back to the upper bounds. Maybe we get it and it completes a trend reversal and then carries on higher. Maybe we just get back to the upper bounds. That's it. I think the call calendar spread, I really think there's something there. As someone who doesn't understand all these option strategies too great.
Yeah, it helps us get paid to wait, which is nice.
Yeah, I understand like every other or every third word that comes out of Sean's mouth. So
That's the last time Spencer invites me on this show.
No, this is the first of many, Sean. The first of many. But I'm more of a visual. Like I can explain options, but like then in practice, it's like it's a whole other thing. But yeah. Okay. 2:00. Boys, let's wrap it up. I appreciate all the participation in the chat today. Didn't see any comments on Twitter, but we got a few on YouTube, which is nice. If you guys want to drop us a like there and subscribe, we would appreciate that. You want to give us a follow on Twitter. Stock Market TV actually our handle is at STK MKT TV, I believe. That's
it's not confusing at all.
It's stock. STOCK stock MKT TV. You can follow these guys on Twitter. Sean is at Options Sean. It's going to take me a while to get used to that. And Straza is at S Straza, and I'm at SJ Israel. And we're doing this show once a week. It's going to be one of many new shows on our channel here. We are scaling up this programming and this network, so stay tuned for more. And that's all I got. Straza, good luck this weekend with your UConn Huskies. And Sean, happy opening day. And that's what I got. Anyone have any last thoughts? Final words?
Cubs.
Yeah, go UConn. I'm so psyched for this weekend. Really, really can't wait. And also, market's just fading all day today. I don't love it. Really don't love this price action.
Don't love it. He doesn't love it, everyone. All right. That's a wrap for us. We'll catch you guys next week. Have a good one.